G'day everyone, welcome back to Pete's Investing for a Quickie. We'll take a quick look at trading using two moving averages in a very simple strategy. But first, the legal stuff. We're not offering financial advice, but rather it's an educational series to help you make better trading decisions. First, we'll demonstrate a single entry trade. So that's where the exponential moving average, the red line, crosses above the moving average, simple moving average 20, which is the blue line. Which it does there, it breaks above the blue line, and we enter our first lot of shares there. Each time we enter a lot of shares, we enter $2,000 lots. You can enter in less or more, depending on your budget, obviously, and your account balance. But in my examples, I'm using $2,000 for every entry. So we enter $2,000 worth of shares there. The share price drops off again, and then it appreciates again. The exit criteria is it must break above a 5% gain, and I've drawn a ruler here. So if we put a ruler there at a 5% from our entry point, the first criteria is must be greater than a 5% gain before we consider closing it. The second criteria is the moving average, exponential moving average 9 must break below the moving average 20, which it does there. So it closes below the EMA 9 closes below the EMA 20, and it's also above our 5% gain. That's our single trade. In this example, we'll be demonstrating the average down approach. So again, we enter our first lot of shares when we initially open the trade. We buy $2,000 where the EMA 9 breaks above the moving average 20, which it does there. In this case, the share price drops off again. We don't panic. And we enter our second lot of shares when the moving EMA 9 breaks above the moving average 20. Now, there's two criteria to enter to do this. We need to, first of all, expect at least a 5% reduction in the share price. So 5% is roughly there. So our share price has dropped more than 5% from our initial entry, and the EMA 9 breaks above the moving average 20. So it just falls below that two criteria. So we enter our second lot of shares there. Now the share price, the average share price is going to be somewhere in the middle here, between that point and that point. So it's going to be somewhere in the middle there. So let's put that 5%, say roughly there, just eyeballing it. So our exit strategy is when the average share price now, which is somewhere around there, our share price breaks above a 5% gain from that average. In this case, it has. And the second criteria is the EMA 9 needs to break below the moving average 20, which it does here. So we close out the trade on that one. So we've entered one lot of shares, two lots of shares. The new average price is down in the middle there somewhere. We break more than 5% from our average price, and we close out with the EMA 9 breaks below the moving average 20. Here are the trading rules for the very simple moving average strategy. We enter the trade when the exponential moving average 9 period crosses over the simple moving average 20 period. We exit the trade when the exponential moving average 9 period crosses under the simple moving average 20 period, and the share price has gained at least 5%. We average down when the exponential moving average 9 period crosses over the simple moving average 20. This is the same as the initial entry, and the share price has declined by at least 5%. Also, when we average down, we buy 1.25 the number of previous shares bought. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. This ensures the probability of the shares of the company you're buying has had a good track record and more likely potential of future growth. Buy stocks which pay dividends. Do a quick search of the stock before buying to ensure it recently paid a dividend or is about to. This is a good indicator that the company has future potential of growth. If the company recently stopped paying dividends, it may be a sign that their growth potential may be challenged. Don't short positions, go long only. If you short up an instrument which pays a dividend, you'll end up paying that dividend to someone else who went long on the same instrument. Do not trade on news. Price is already factored in the share price. If you read an article in the finance pages which talks about an event on the stock you're considering, the chances are it has already been factored in the share price. So you've missed that boat. I did a video in September 2021 titled Uranium Stock Too Late to Trade, which demonstrates the effect that news has or hasn't and the share price action. Suggest you watch that video to get a better understanding. Thanks for watching. Don't forget to click the subscribe button, like button, and click the notification bell to get all the updates to the channel. Happy investing and see you in the next video.